are the things that you see as a tax professional that are the great missed opportunities that people that are listening should know about, where they're leaving money on the table because they're just not doing things in a manner that they can be within the tax code, within all legality? Um,
Hmm.
Maybe you can get us started with some strategies and some tips there.
Yeah, the biggest thing I see are business owners not structured correctly. And so, I think for a lot of us, we start a business and we're like, let's just get our LLC or maybe even nothing before they get started. But eventually, I think a lot of people get their LLC. But when you are an LLC, you're actually taxed at the highest rates. And so at some point, it probably makes sense for most business owners, not all, but most, and especially those in real estate or mortgage, to eventually become an S corporation. And that is just a tax election. You're still an LLC for all intents and purposes, but for taxes, you're an S corporation. And what that can do is save you up to $22,500 per year. And that's because as an LLC, you are taxed what's called self-employment tax. But on your tax return, it doesn't say that. It's just called other taxes. So people don't really pay too much attention to it. They're just like, oh, yeah, I paid X amount in taxes. But if you can switch to an S corporation, you can get out of most of that self-employment tax. And so I see that a lot. And I think a really good point to switch from LLC to S Corp is around the $40,000 of profit per year. So not revenue, but profit. So after your expenses, that's about the time it makes sense in terms of cost benefit analysis, because you will have, another tax return to pay for, and you will have to be on payroll and those types of things. But at about 40,000, you're making money on that switch over. And if you're making 100,000, you're saving 15,000 in taxes every year. If you're making 140, that's where you get the 22,500 of savings. So entity structure is really, really important. And then I think a lot of it is just how you spend your money and not writing off the things that you can tie to your business that maybe you weren't even aware of.
Mm.
And so,
Yeah, let's
like,
go
we
into
have the
that.
trademark. Yeah, we have the trademark Write Off Your Life, because that's the name of our course. And it's true, like, we love teaching business owners how to write off their life. And so, turning seemingly personal expenses into business. For example, I think whenever any business owner is traveling, they can link it to business in some way, shape, or form. Whether they're going to a conference or they're going to a retreat or they're meeting with a colleague or networking in some way, shape, or form. Like, similar to our industry and taxes, just like mortgage and real estate, anyone can be your client at some point or another. So whenever you're talking to anyone, you're probably telling them what you do. And if that person can at any point be a client, you just now had a prospect meeting. Right. And those types of things are travel expenses. Those types of things are meals deductions. And so we love helping business owners be like, okay, how are you spending your money? What are you doing? How can we get more of those expenses into your business and then save you money on taxes?
In the event of an audit in the situation that you just described, what type of proof that would be required to the auditor to make that a legitimate, you know, business meeting for business development, so to speak? Like, what are they going to ask for?
Yeah, they basically ask for like the who, what, where, when, why. And to capture all of that information, like, I keep everything on my calendar. I live and die by my calendar. If there's not like an hour blocked off for something, there's a problem. But say you have a dinner blocked out on your calendar from 6 p.m. to 9 p.m. So that's already the time block. You probably have the location in there. So that's the where. And then after a meal, I'll go back into my calendar and put who was there and what we talked about and why that's important for business. So whether it was just networking, prospecting, maybe my husband and I were chatting about who's the next hire is going to be, or what our marketing strategy is for the next quarter. And so really like keeping track of it in your calendar, I think is the easiest way. And then of course, keeping receipts for everything.